Good morning and welcome to T-Hub Capital, the Investors Lounge, the podcast where we explore financial market dynamics, emerging trends, and the insights that shape successful investments. Each week, we'll delve into the strategies and analyses that drive our investment decisions. You'll get an insider's perspective on the factors influencing markets and the potential winners and losers of tomorrow. Subscribe to the podcast to stay ahead of the curve and make informed investment choices. Enjoy listening.
Welcome to T-Hub Capital's The Investors Lounge weekly newsletter. Today's date is the 23rd of June. Let's dive into the week's stock market news. European markets under pressure amid mixed economic signals. European stock markets experienced a general decline last week, with the Pan-European Stocks Europe 600 index closing 1.54% lower due to ongoing concerns about Middle East tensions. Major national indexes also saw losses. Italy's FTSE MIB slipped by 0.53%, Germany's DAX declined by 0.70%, and France's CAC 40 index fell by 1.24%. The UK's FTSE 100 index recorded a 0.86% loss. In the United Kingdom, the Bank of England BoE maintained interest rates at 4.25%, a decision that was largely anticipated. The central bank cited elevated global uncertainty and persistent inflationary pressures as key reasons for holding steady, though policymakers were divided 6-3 on the vote. BoE Governor Andrew Bailey indicated that interest rates remain on a gradual downward path, while emphasizing a cautious approach to future rate cuts. Meanwhile, consumer price inflation in the UK saw a slight moderation in May, rising by 3.4% annually, a decrease from 3.5% in April. Services price inflation, a metric closely monitored by the BoE, slowed to 4.7% from 5.4% in April, aligning with the central bank's projections. Elsewhere in Europe, central banks in Switzerland and Norway opted to reduce their key rates. The Swiss National Bank cut its policy rate by 0.25 percentage point to 0%, citing lower inflationary pressures and the strength of the Swiss franc, and indicated readiness to intervene in currency markets if necessary to manage inflation. Norges Bank, Norway's central bank, unexpectedly lowered its key rate by 0.25 point to 4.25%, marking its first reduction in 5 years, noting a deceleration in inflation. Economic sentiment varied across major Eurozone economies. German investor morale experienced a significant surge in June, with the ZW Research Institute reporting that its economic sentiment index climbed to 47.5 points from 25.2 points in May. This improvement followed the government's approval of a substantial tax relief package earlier in the month. Conversely, manufacturing confidence in France weakened, as the climate indicator dropped to 96 in June from 97.1 in May. This decline placed it further below its long-term average, largely due to a continued reduction in overall order books. The French Statistics Office, INSEE, anticipates manufacturing output to remain flat this year and projects economic growth to hold steady at 0.2% across the second, third, and fourth quarters. Finally, the Eurozone's current account surplus experienced a sharp contraction in April, narrowing to EUR 19.3 billion from EUR 39.1 billion a year prior. This comes after the surplus reached a record high of EUR 60.1 billion in March, a period during which consumers and businesses increased purchases in anticipation of new US tariffs. Now our insight into alternative markets, proactive selling, unlocking superior value with vendor due diligence. Vendor due diligence (VDD) represents a pivotal strategic shift, empowering sellers to elevate the value of their assets and significantly accelerate the sales process by proactively embracing the perspective of potential buyers. Unlike the traditional due diligence initiated by buyers, VDD places the seller in control, allowing them to thoroughly evaluate their own business, preemptively mitigate identified risks, and construct a compelling narrative that unequivocally showcases the asset's true worth. This forward-thinking methodology inherently strengthens the seller's negotiating stance, dramatically speeds up transaction timelines, and substantially increases the probability of securing a highly favorable deal. This discussion will explore the essence of vendor due diligence, detail its comprehensive methodology, and illuminate the distinct advantages it confers upon vendors during critical negotiation phases. Vendor due diligence constitutes a meticulous, buyer-focused assessment of any business unit, subsidiary, or asset designated for sale. It transcends simple market studies or competitor analyses by providing an exhaustive evaluation of the asset's precise market positioning, its historical financial performance, inherent operational strengths, and its undeniable growth trajectory. By astutely anticipating the priorities and potential concerns of prospective buyers, VDD constructs a transparent and rigorously fact-based narrative that not only underscores the asset's intrinsic value but also clarifies its strategic alignment with potential acquirers. The core objectives of VDD are threefold. First, to meticulously identify and proactively address any risks that could diminish value or deter interested buyers. Second, to furnish buyers with supremely reliable data, thereby streamlining their own due diligence efforts. And third, to empower sellers with profound insights, enabling them to negotiate with unshakable confidence and maximize the overall deal value. This comprehensive preparation proves particularly invaluable in intricate mergers and acquisitions, complex divestitures, or strategic sales of entire business units, as it enables sellers to resolve latent issues early in the process, ultimately presenting a polished, fully buyer-ready package. The execution of vendor due diligence, typically orchestrated and guided by seasoned advisors, seamlessly integrates deep industry expertise with rigorous analytical frameworks and a highly customized, buyer-centric approach. This meticulous process is designed to enhance inherent value and markedly reduce transaction-related risks. Advisors engage in close collaboration with sellers and their respective teams, ensuring absolute alignment of objectives and maintaining a sharp focus on the ongoing operational integrity of the business. The methodology encompasses several critical stages. Initially, advisors conduct an exhaustive analysis of the asset's market standing, scrutinizing the competitive landscape and pinpointing significant growth avenues. This involves a meticulous examination of financial performance, an assessment of operational efficiencies, and a deep dive into strategic potential to unearth the underlying drivers of value. Throughout the process, the emphasis remains squarely on buyer priorities, focusing on aspects such as strategic fit, scalability, and precise risk exposure. By expertly anticipating the questions and potential concerns likely to arise from buyers, VDD ensures that sellers are comprehensively prepared to address them proactively and convincingly. Critical to the process is the early identification and systematic mitigation of potential risks, be they financial, operational, or market-related, thereby safeguarding against value erosion. This might involve proactively resolving operational inefficiencies, meticulously clarifying financial projections, or expertly navigating complex regulatory challenges. Furthermore, advisors extend their analysis beyond standard metrics to uncover previously untapped value creation opportunities, such as strategic market expansion, innovative product development, or compelling operational synergies. These insights are meticulously tailored to resonate directly with buyers, effectively highlighting the asset's undiscovered potential. Finally, all findings are synthesized into a clear, compelling, and data-driven narrative that powerfully articulates the asset's inherent strengths and its precise strategic fit. This includes providing robust quantitative responses to various what-if scenarios, instilling buyers with profound confidence in the asset's significant upside potential. The entire transaction process is then managed with a disciplined, customized approach, supporting sellers from the initial portfolio review and the development of an exit strategy through to the precise execution of the deal and its eventual closing, always aligning with the seller's ultimate goals while effectively addressing buyer priorities. Vendor due diligence confers a substantial advantage upon sellers during negotiations by delivering a robust, fully buyer-ready package. This comprehensive and transparent VDD report empowers sellers to negotiate with unwavering confidence. By proactively addressing potential concerns and clarifying uncertainties from the outset, sellers markedly reduce the likelihood of buyers raising late-stage objections or submitting revised, lower offers. Furthermore, the buyer-centric analytical approach employed in VDD meticulously highlights the asset's strategic compatibility and its compelling growth potential, often providing robust justification for a premium valuation. Independent and unbiased assessments provided by experienced advisors can further bolster confidence among both buyers and lenders, thereby supporting higher bidding activity. VDD fundamentally streamlines the buyer's own due diligence efforts by furnishing immediate and comprehensive answers to critical inquiries. This efficiency significantly reduces the time and resources buyers need to evaluate the asset, thereby accelerating the entire deal process and minimizing operational disruptions for the seller. By identifying and systematically addressing risks early in the process, whether these are operational challenges or market uncertainties, VDD effectively prevents unwelcome surprises that could otherwise derail negotiations or necessitate lower valuations. This inherent transparency fosters crucial trust with prospective buyers and significantly reduces potential deal friction. A meticulously documented VDD report serves as a powerful signal of the seller's professionalism and credibility, reassuring buyers and lenders of the asset's inherent quality and strategic soundness. This, in turn, often leads to smoother negotiation dynamics and a significantly higher probability of successfully closing the deal. Moreover, VDD facilitates strategic storytelling by crafting a bespoke narrative that precisely aligns the asset's core strengths with the buyer's specific strategic objectives. This tailored approach enhances the asset's appeal and distinctly differentiates it from other available opportunities in the market. Finally, by providing rigorous quantitative insights into various commercial and operational scenarios, VDD enables sellers to explore and propose innovative deal structures, such as earnouts or performance-based terms, thereby maximizing value while simultaneously addressing specific buyer concerns. A meticulously executed vendor due diligence process culminates in a buyer-centric, fact-based assessment that vividly highlights the asset's strategic fit and its profound potential for value creation. The key deliverables from such a process include a clear and compelling value proposition, which articulates the asset's strengths, its robust market position, and its diverse growth opportunities. Furthermore, the process yields precise quantitative insights, offering data-driven responses to typical buyer inquiries, including comprehensive scenarios for potential upside and detailed plans for risk mitigation. Critically, VDD provides a clear framework for efficient deal execution, presenting a strategic roadmap for successfully completing the transaction that is meticulously tailored to both the buyer's specific needs and the seller's overarching goals. This comprehensive approach, underpinned by independent and unbiased evaluations, instills increased trust among both buyers and lenders, directly supporting higher and more confident valuations. Whether undertaken as a standalone advisory service or as an integral component of a broader divestiture strategy, vendor due diligence unequivocally empowers sellers to achieve truly optimal transactional outcomes. In conclusion, the vendor due diligence process stands as a powerful strategic advantage for sellers aiming to maximize value and meticulously minimize risks throughout M&A or divestiture transactions. By proactively adopting a buyer's discerning perspective, systematically resolving potential risks before they materialize, and presenting an articulate, compelling, and data-driven narrative. VDD enables sellers to negotiate with unshakable confidence, secure demonstrably higher valuations, and bring deals to a swifter close. Expertly guided by experienced advisors, this transformative process redefines the entire sales journey, turning it into an extraordinarily potent tool for unlocking latent value and driving unparalleled success. For sellers striving to distinguish themselves decisively in an increasingly competitive market, vendor due diligence is far more than a mere procedural step. It represents an undeniable strategic imperative that consistently delivers tangible and superior results.
Thank you for listening to this episode of Hub Capital, the Investors Lounge podcast. I hope you found this content interesting and inspiring. If you enjoyed this episode, don't forget to subscribe to the podcast so you don't miss a single episode, and share it with your friends and colleagues who might be interested. To learn more about T-Hub Capital and our activities, visit our website, hubcapital.com. You can also follow us on our LinkedIn page. See you soon. All the best from the T-Hub Capital team.